Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me is Shreyansi Singh. With this show, we're going to talk a lot about everything that's happened over the weekend. What an action-packed weekend it's been. You talk about everything that's been happening on the geopolitical front, or you talk about sports, three major sporting events, and we'll discuss all of them later. But well, yes, in the first half, we'll take you through everything that's been happening globally ever since market closed on Friday, and as well as back home. In the second half of the show, we'll also take you through all the stocks you should be watching out for in today's trade, as well as the ones that brokerages are flagging off for us bright and early this Monday morning. But Shreyansi, this Monday doesn't seem so bad knowing Wednesday is a holiday, isn't it?
Well, absolutely it doesn't, but let's also take a look at what happened with Wall Street, right?
Absolutely.
Because it's been quite the action-packed week there as well. So when you take a look at stock futures though, you're looking at slightly higher moves coming in. So whether you look at a Dow that saw an uptick of about 0.2%, and S&P 500 as well as Nasdaq also, in terms of a futures basis, are indicating an uptick of 0.1% thereabout. Now, investor attention, of course, is shifting to second quarter earnings, and there's a lot of earnings that are lined up, and that is also the catalyst that the market is at this point keeping on its radar. But let's also take a look at what really happened in the week gone by and the kind of action that we saw. So let's take a look at the blue chip Dow, and when you're looking at that one, you see a fresh all-time high above 40,000 coming in for that one on Friday, bringing its 2024 gains to 6.1%. So that's a good year coming in for Dow, as well as a good move for that particular index. Let's also take a look at the S&P 500, because that one also saw gains of about 18% coming in 2024 to a new record, powered by tech giants. And that is the larger story, Snehi, that we've seen play out with regard to the S&P 500. Even the Nasdaq also is indicating a little bit of a story there. The major equity benchmarks just came off another solid week as easing inflation data fueled rate cut bets. So that is something that the market is keeping on its radar after that US PPI data. And the S&P 500 then gained about 0.9% last week. So that's the move that we saw coming in last week, scoring its fifth positive week in 6, and that is the kind of move that we saw for S&P 500. Nasdaq, like I mentioned, also rose about 0.3% during the same period, but the real outperformer was the Dow, because that was the relative outperformer, gaining 1.6% for its best weekly performance since May 10th. Now, this is as investors started to embrace a broader array of stocks than just technology names. So it does look like the rally is just sort of widening at this point. But let's really see how that pans out. You also have results from some of the US big banks that kicked off the reporting season on Friday that were mixed. So whether you look at a JP Morgan or Citigroup, both topped Wall Street expectations for earnings and revenue. But when you take a look at Wells Fargo, then you're looking at a decline in net interest income that also disappointed investors. So that largely is the kind of roundup that we saw in terms of bank earnings. And there's a lot to keep on our radar, Snehi. But tell us first about oil and gold then.
Absolutely. First, let's take a look at what oil prices have done, and slight bit of a negativity or slight bit of cuts being seen on that front, because if you take a look at what WTI is up to right now, $81.85 a barrel, very close to that $80 per barrel mark. That's where WTI has come down to. Brent also under 85 at $84.67 a barrel is where Brent is trading right now. Let's understand what has led to all of these. And crude oil futures, like I mentioned, they've fallen. They've snapped a recent 4-week winning streak, as this rally that we've seen recently has lost momentum. Prices rose earlier in the session after 2 days of gains, as June consumer inflation eased to around its lowest level in more than 3 years. So that was an important thrust when it came to oil prices. And that also bolstered hopes for the Fed Reserve and there were hopes that it will cut interest rates this year, as well as stimulate demand for oil. But futures ultimately lost momentum later in the day. I'm talking about Friday, and after a measure of that wholesale price index, the WPI rose 0.2% in June, slightly higher than the 0.1% uptick that economists were expecting. So that is what has negatively fed for crude prices. US crude posted a loss of 1.14% for the week that went by. Brent down by 1.74% as well. But US crude oil and gasoline inventories also fell for the week ended July 5, in a sign that summer fuel demand may be finding some life. Now, you also have another player that comes into picture over here, and that is OPEC. OPEC and the International Energy Agency, which is the IEA, however, they've sent conflicting signals again on where demand is trending this year. And the cartel of producers is bullish. They're seeing demand increasing by 2.2 million barrels per day this year on solid economic growth. The bloc of largely Western states, on the other hand, sees demand growing just under 1 million barrels per day as the global economy softens, particularly in China. So, lots of geopolitical factors as well as market factors such as demand and supply coming into play. There's some mismatch coming in from two of the biggest oil producers. You have the Western Bloc as well as OPEC giving very contrasting projections when it comes to oil demand. And on the back of that, along with the WPI as well as the gasoline and oil data that we did see coming out of the US last week, that is what has fared negatively for oil prices. So, well, that is where oil is as of now, and lots to watch out for on this metric as well. But when you take a look at gold also holding above that $2,400 per ounce level. It is on its way for a third weekly rise, but as of now trading with cuts of 0.3%. That's where gold is at, Shreyansi.
Well, absolutely. And let's kickstart the morning with the biggest global news that we're tracking this hour. Former US President and Republican candidate Donald Trump was shot at by a 20-year-old assailant while he was addressing a campaign rally in Pennsylvania. This resulted in an ear wound, one death, and several injuries. Now, the FBI has identified the assailant and it was shot dead. According to reports, meanwhile, US President Joe Biden addressed the nation on the horrific incident and asked the Americans to lower the political temperature and remember their neighbors. He also said, and I quote, "We can't allow this violence to be normalized. The political rhetoric in this country has gotten very heated. It's time to cool it down. We all have a responsibility to do this," end quote. Leaders across the globe have condemned the attack on Trump. Trudeau, Macron, Kishida, Zelensky, Stoltenberg, Scholz, and others emphasized the unacceptability of political violence. And on the other hand, Modi, Macron, along with UAE, highlighted the threat to democracy, sending condolences and wishing Trump a swift recovery. So that's the latest update coming in there as well.
Alright, moving on then, let's shift focus and talk about Google, because Google is in focus today. As per reports, Google is in advanced talks to acquire cybersecurity firm Wiz for $23 billion. Israel-based company is one of the fastest growing software startups globally, and if completed, this deal would be Google's largest acquisition and a rare example of a major tech company pursuing a mega deal amid heightened regulatory scrutiny under Biden's administration.
And looks like surge in investment banking is providing a good fillip to US banking majors in Q2 like JP Morgan, which saw profit jumping 24% on a year-on-year basis, $18.1 billion, with investment banking fees rising 52% to $2.3 billion. Citigroup also saw a 60% increase in investment banking revenue, reaching over $20 billion in total revenue despite higher credit card losses and a $136 million regulatory fine coming in as well. The bank earned a better than expected $3.2 billion. So that's the latest coming in terms of bank earnings.
And JP Morgan Chase CEO Jamie Dimon warned about the US inflation despite recent signs of easing in price pressures. Although he acknowledges that there has been some progress in bringing down the inflation, but he still believes that there are still multiple inflationary forces like large fiscal deficits, infrastructure needs, restructuring of trade, and remilitarization of the world. And hence, Dimon expects inflation and interest rates may stay higher than what the market is expecting.
Moving on then, China's top Communist Party officials are gathering in Beijing for a meeting known as the Third Plenum. The meeting scheduled for this week typically happens only once every 5 years. This plenum was widely expected to be held last fall but has been delayed. The event comes at a crucial moment for the Chinese economy as policymakers grapple with a persistent property crisis, sluggish domestic demand, and rising trade barriers overseas. The announcement is expected to focus on addressing economic bottlenecks, improving productivity, fostering innovation, and enhancing living standards as well. This continues China's tradition of pragmatic, gradual economic reforms.
Hi there, welcome back. Still watching Market Cafe on ET. Now let's take a look at how the Asian markets have opened up this well, and all of these markets have mostly fallen this morning as investors await China's third premium and also assessed an assassination attempt on former US President Donald Trump in a rally over the weekend. Now let's talk about China first. China's top leaders will gather this week for a highly anticipated meeting known as the third plenum that Shreyansi just told you about, with analysts expecting the gathering to focus on areas such as high local government debt levels and a push for advanced manufacturing instead of the country's real estate sector. Now, key China economic data will also be released this morning in a short while, including the country's second quarter GDP numbers. China's economy is expected to expand 5.1% year on year, according to a Reuters poll of economists, compared to 5.3% in the first quarter. On the back of that, let's take a look at what Shanghai is up to as of now. And trading with cuts of 0.2% is what Shanghai is doing. If you could just have that graph on screen. And that is largely what Shanghai was up to. There you have it. Almost 7 points lower. Not doing much, but well, yes, 0.2% in the red is where Shanghai is. Moving on, let's talk about what Hong Kong is up to. And Hong Kong's Hang Seng Index also fell 0.4% on open, but has continued to build onto those losses. Unfortunately, 120-point cut, more than 0.5% lower, is where Hang Seng is as of now. Shifting focus, let's talk about an index that seems to be the only index that is holding on to gains when we talk about major Asian markets, and that's Australia. And look at those gains coming over there. 0.8% higher is where Australia's ASX 200 is as of now, extending gain to a third straight day, hitting a fresh all-time high is where ASX 200 is, 8,025 on that index, an all-time high as of now. Japan's markets are also closed today for a public holiday on account of a Marine Day, so the rates you're seeing for Nikkei, more than a 2.5% cut coming in are Friday's moves. Let's see if the markets come back tomorrow after a holiday, if these markets can recover. And lastly, let's talk about what Kospi is doing. South Korea's Kospi was lower 0.1% on open. As of now, 0.2% lower, a 6-point cut coming in. Not much happening on that front as well. But let's shift focus, talk about how we managed to close on Friday just above that 24,500 level, 24,502 to be precise on Nifty spot. Implied open at 24,607, indicating a more than 100-point gap up start when you at least take a look at the spot basis, and Nifty futures also indicating a roughly 85-point uptick. So seems like we're headed for a good day, but we'll just have to wait and watch and see what the markets have in store for us today, Shreyansi. Hi there, welcome back. Still watching Market Cafe on ET now. Let's delve into some stock-specific news then. Talk about a stock that was in focus on Friday. Gains of more than 2.5% on Friday itself, and is going to be in focus today as well. And the one I'm talking about is Zomato, because Zomato has once again hiked its platform fee, taking it to 6 rupees per order now. The food delivery platform has increased this platform fee 3 times in almost the last 1 year. Samit is here with all of those details. Samit, good morning.
Well, it's yet another hike on the platform fee that Zomato and Swiggy, both of them have taken. Now, Zomato is the listed one, so we'll talk about that. Now, they have hiked the platform fee from 5 rupees earlier to 6 rupees. Now, they have been continuously within a gap of within every few months, they have been increasing this platform fee by 1 rupee. And if you see, nearly in the last 1 year, the platform fee has increased from 2 rupees to 6 rupees. They had started charging the platform fees in August 2023 by 2 rupees. In October, they increased it by to 3 rupees. In January, they increased it to 4 rupees. In April, they had increased it to 5 rupees, and now they have increased it to 6 rupees. So less than 1 year, they have increased the platform fee by nearly 3x. Swiggy had introduced platform fee back in April 2023, and they are also now charging a 6 rupees platform fee on every order. So platform fee is a flat fee charged by both Zomato and Swiggy on per order, irrespective of the order amount, and this fee is charged to both members and non-members of Zomato and Swiggy. Now, what will be the impact of the same on Zomato's financial? Now, as per analyst, every 1 rupee hike in the platform fee increases the food delivery business's contribution margin by around 0.2 percentage points. And if you see, as of FY24, Q4 FY24, the company had a contribution margin of close to 7.5%. So definitely this will increase. And on an absolute basis, if you see, the company does around 19 crore orders on a quarterly basis, which the number is what the company has been clocking for the past few quarters. So on an annual basis, this hike could definitely increase their EBITDA by around 80 odd crore rupees, which is nearly 6 to 7 odd % of their EBITDA amount. So that's the kind of financial impact or financial bump up that we can see on the back of this 1 rupee hike done by Zomato. on the platform fee.
Well, absolutely. Thanks, Amit, for that roundup coming in. Let's also take a look at some macro data then. India's retail inflation rate in June reversed its 5-month downward trend owing to an increase in food prices and crossed the 5% mark. Now, India's June CPI inflation came in at 5.08%. The June retail inflation has been the highest in 4 months. Meanwhile, India's industrial production also rose to 5.9% in May, which compares with 5% in the previous month of April. The previous high of IIP was also recorded at 11.9% in October 2023, which slowed to 2.5% in November, 4.2% in December, as well as 4.1% in January as well. Let's go across and listen in to what Saugata Bhattacharya, independent economist, had to say about the trajectory as well as this data set.
The inflation numbers are higher than what we had expected. 4.8 was our own estimate, given what we saw of cereals, vegetables, fruits, prices, pulses, etc. So we had thought about 4.8%, instead of which it's come in about 5.1%, which is certainly. We had got an indication of this from Governor Das's interview, where he said that they were expecting inflation around 5%. But this definitely increases the chances that this quarter's inflation will be hotter than the earlier RBI expectations or RBI forecasts. We need to see what the core inflation is. And we know that during the heat wave, etc., I mean, there have been multiple disruptions. So this is definitely a little notch higher.
All right, let's move on from India's inflation and talk about a big event that's just around the corner. And I'm talking about the union budget. The government is likely to allocate around 2.8 to 2.95 lakh crore to railways in the upcoming budget. My colleague Jinay is here to give us a breakdown of the budget allocation towards railways and what we can expect in the budget this year, especially for railways. Jinay, take it away.
Well, yes, railway sector has been a government's area, a focus area for last couple of budgets. If you look at a railway budget allocation CAGR for railways, it has been growing at a CAGR of about 9.8%, growing right from 1.6 lakh crores in FY 2021 to growing to about 2.55 lakh crores in the interim budget in FY 2025. Now, also, if you look at breakdown this budget from segmental wise, the 1-year change we'll find out that the budget for bridge works, tunnel works and approaches increased by about 66%, road over and under bridge by 29%, road safety works increased by about 28%, new lines construction saw an increase of about 13%, and rolling stock budget saw an increase of about 12%. Moving on, Ashwini Vaishnaw, who is the Union Minister of Railways, also announced a significant boost to country's rail network, where he announced first is the production of 2,500 new general passenger trains. Also, additionally, he has approved production for about 10,000 new coaches. Third, about 5,300 kilometers of rail network was added last year. Well, this year so far, about more than 800 kilometers of rail track has been laid out. Fourth will be production of new 50 Amrit Bharat trains have begun. And lastly, railway is targeting about 4,500 kilometers under Kavach system for this year. Also, budget is upcoming right now. Let's look at some big announcement which will be done in budgets. First is budget for railways likely to increase and coming around 2.8 lakh crores to 2.95 lakh crores. Second is on Kavach front, railways expecting to float a tender for about 3,000 kilometers in this year. And lastly, railways will be focusing on transformation for passenger rail system. You know, railways targeting about 250 Amrit Bharat trains over next 5 to 7 years. Also, don't forget this, that the trials for first sleeper version of Vande Bharat to begin before 15th of August.
All right, thanks, Jinay, for that update coming in with regard to the railway budget. There you have it. That is going to be the focus area. But let's also take a look at what else the railway budget is going to be focusing in on. And that would be the common man. Sources say that to meet the massive demand, the railways plan to run additional trains that will have relatively more number of general as well as sleeper coaches. And these additional trains will also be running on the popular routes where there's massive demand or rush. The announcement is likely to be made in the upcoming budget, and my colleague Sameer Dikshit is standing by with more details. Sameer?
for this financial year, the Railway Ministry is looking to have a larger focus for the travelers who are there in general coaches, sleeper class coaches. So what we are picking up from our sources that for FY 24-25, 25 special train, additional special train will run in the initial phase. These will be non-AC coaches based train. For example, this particular special train will have a composition which will include higher number of general class coaches and sleeper coaches. Only few AC coach will be attached to this special train. And the interesting part is that these trains will run on the busy or the popular routes where there is higher passenger demand. In the first phase, 25 routes have been identified by the Railway Ministry, which includes routes like Gaya, Delhi, Mumbai, Rajasthan, Darbhanga, Delhi. In addition to this, Assam to Delhi is one popular route. Also, we see that in South Division also there are a couple of more routes where there is a very high passenger demand. So on these routes where government will be running these additional special train, it will be for the masses, non-AC coach based train. No dynamic fare will be there. But also these trains, the punctuality will be properly monitored by the Railway Ministry, and it will be in a move that for those people who are looking to travel, if they are not getting a confirmed ticket, if they are not able to find a place in the popular trains, then they will have an option to travel in these additional special trains that will be running on popular routes where high passenger demand is there. The routes have been identified. Initially, it is 25 numbers. Going forward, the numbers will increase. And the reason is that the infrastructure development that has taken place in the railway sector in the last 10 years, that has actually brought in fruitful results. The development is now taking up place, and we can see that the announcement will be made in the upcoming union budget.
All right, thanks, Amir, for all of those details. Now, the upcoming union budget is also expected to place significant emphasis on infrastructure development, particularly in the road transport sector. Sources indicate that the Road Transport Ministry will be a focal point with a substantial increase in budget allocation. Samir is joining us once more to understand what can be announced when it comes to road transport and related sectors. Samir, take it away once more.
Government wants to keep the entire focus on the infrastructure development and the upgradation. And in the same direction, the Road Transport Ministry is likely to receive a budgetary allocation of around 8 to 10% higher than the last financial year. For FY 24-25, the budgetary allocation could be somewhere around 2.9 to 3 lakh crore. For this FY 23-24, it was 2.76 lakh crore. So higher budgetary allocation, it will be in the move that an extensive network of expressways and highways will be laid upon. It is very likely that for this financial year, the 3,000 kilometers of highway road construction and the tender award for the same will take place. Announcement might be there in the upcoming budget. And also for the initial 100 days after the government formation, the Road Transport Ministry is having an ambitious target to construct 1,000 kilometers of highways or the road. So that's the ambitious part. In addition to this, we are also picking up from our sources that cashless treatment to the accident victim, it is one of the topmost priority of the Road Transport Ministry. And in the same direction, we might see that some of the announcement may come in, some steps that the government wants to take in for providing cashless treatment to the highway or the roadside accident victims that might take place. Also, the Road Transport Ministry wants to make the road design better and accident-free. So there might be some MOUs that may be taking place in this financial year with the technical education institutions like the IITs. So MOUs, signing up of MOUs between IIT and Road Transport Ministry is another agenda of Road Transport Ministry. Also, government wants to provide roadside amenities for the highway travelers or the expressway travelers. So a dedicated scheme might take place for the same. Lastly, government also wants to take up a long-term vision, which is Vision 2047. And under the Vision 2047, Road Transport Ministry wants to lay an extensive expressway network of 50,000 kilometers. And for the same, the foundation has to be laid now. And in the same direction, we might see that some big announcement or big steps might be taken up by the Road Transport Ministry, and the expectation will be there in the upcoming budget as well.
All right, thanks, Amir. So there you have it. That is what is expected with regard to infra development. But let's move on to earnings then. HCL Tech has posted a steady set of numbers in the first quarter. So when you take a look at profit, then profit came in higher than expectations, helped by a one-time adjustment. Even when you take a look at revenue and margin, They as well beat expectations. We have my colleague Anisha Jain is joining us on the phone line with all the number crunching.
Profit looks like a beat, but that is because of the one-off that I see, because the other income has shot up quite materially. There's a 1100 crore other income this time around versus 400 crore that was their last quarter. So there is a bit of a, one-time element as far as the bottom line is concerned. Having said that, the constant currency revenue is down 1.6% quarter on quarter. We were penciling in a decline of 2%. So on the top line, the performance has been better as well. The U.S. revenue has come in at $3,360 million. That compares with my expectation of $3,358. So a smidge better, if I can call it that, versus my expectation. Revenue overall, 28050 was my expectation. The actual number has come in at 28057. The revenue largely in line with expectation to slightly better. Margin has held up at around 17%. Again, we are working with a number of 16.9. So in line with expectation there. And the profitability is looking better, but it seems like that is on account of the one-off income which I'm seeing. Now, in other details, the TCV of the new bookings is coming at $1.96 billion. Slightly lower, but not anything to get worried about, I would say, at the moment. But definitely something that we'll have to track, because for TCS as well, the deal win momentum was a bit lower. The company has maintained their guidance when it comes to the FY25 revenue. So the revenue guidance continues to be around 3 to 5% growth, which was the earlier guidance as well. And the margin too has been maintained at 18 to 19%. This was something that the street was largely penciling in, that the guidance will be maintained. That has been held as well. I'm also taking a quick look at the attrition figure. That's come down to 12.8%, and they've added almost 1,080 freshers as well. While overall, if you look at the net additions figure, it continues to be negative. So if I had to give you a summary of how the numbers look, well, they are in line with expectation. Nothing that looks like a big worry to me at this point of time.
All right, Anisha, thanks for taking us through what HCL looked like. And let's also hear out from the management and what they had to say about the attrition that they saw in quarter one and the expected business growth in quarter two. Listen in.
Last year, we delivered a very strong growth in financial services, 11.5% constant currency growth, and which was really enabled by the large deals that we had won, as well as some of the discretionary work that we continue to do for our clients. And some of these deals have transitioned into from an onshore model to a global delivery model, which means the revenue would come down. And that's what you're seeing in this quarter. And moving forward, we continue to see a lot of cost optimization deals. And we continue to see modernization and technology transformation kind of opportunities which will result in significant efficiencies for our customers. So that's what we are seeing in the pipeline. There are a couple of transformation projects as well. So we expect, of course, in Q2 will be a declining quarter for financial services because of the State Street divestiture revenue going out. But after that, we would expect to see growth in this vertical. We expect to grow in Q2 with all verticals and geographies seeing a sequential growth except financial services. As you know, we shall have the planned impact of State Street divestiture on our revenue in Q2. And including that impact, we remain comfortable with our full year revenue and margin guidance as clients spend on Gen AI and other emerging technologies are seeing some traction. We expect to meet the guidance through strong operational execution that we've demonstrated over the last several years.
All right, then that's the word coming in from the management. But let's also take a look at what brokerages are saying then, because we do have notes coming in from Nomura, Citi as well as Investec. We have my colleague Sharad who's standing by with just the key takeaways from all of those notes. Sharad?
Well, yes, and first is Nomura on HCL Tech. They have maintained a buy, but they have hiked the target price by almost 20 rupees to 1720. The Q1 numbers has been slight beat to the overall estimates, and the brokerage house stated that they are on track to get their FY25 revenue growth guidance. And also Gen AI, that will be something which the street will be watching out for. For Citi, they have maintained neutral. They have hiked the target price to 1,545 rupees from 1,495. And overall, they have stated that the overall TCV, the deal size is $1.96 billion, has been slightly lower than expectation, but can be lumpy from quarter to quarter. Also, the positives remains is that guidance remains unchanged. Lastly, Investec would also come out with this report, and they have maintained a sell rating, but the target price has been slightly increased to 1,312 rupees from 1,300, and they have stated that the impact of JI is quantifiable currently, and now it's going to be a net gainer going ahead. And also the primary concern they have stated is the EBIT percentage being at the bottom of the guided band.
All right, Shara, thanks for all of those details. We'll slip into a short breather on this edition of Market Cafe. We'll be right back with more stock-specific news and updates, so you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the stocks that you should keep on your radar, and we have my colleague Ria who's standing by with just that update. Ria, over to you.
Yes, good morning. Let's take a look at the stocks and news today. Firstly, we have IREDA reporting their Q1 FY25 numbers. They've reported good growth on all fronts, and they've seen a healthy expansion in the revenue, EBITDA and net profit numbers. We also have Suntec Realty reporting their Q1 business updates. Their pre-sales have come in at rupees 502 crores, showing a growth of 30% on a year-on-year basis, and the collections have also shown healthy growth, up almost 19% over the previous year. Let's move on though to some pharma updates. Firstly, we have Piramal Pharma. The US FDA has concluded its pre-approval inspection at the Ahmedabad facility with zero observations. We also have Alembic Pharma, which has received tentative approval from the US FDA for its ANDA for certain injections. Let's also talk about the order wins today. First up, we have EMS backing an order worth rupees 141 crores for the development of certain of distribution infrastructure, and RVNL has also received an LOA worth rupees 133 crores from Central Railway. And lastly, we have GE T&D India Limited receiving an order worth rupees 490 crores from Power Grid Corporation of India.
All right, Ria, thanks so much for joining us and taking us through all the stocks that could be in focus today on the back of their individual news flows. But let's talk about an earnings candidate, and numbers came out over the weekend. Avenue Supermarts has come out with an inline set of Q1 numbers, and revenue has surpassed street expectations, logging an 18% jump on a year-on-year basis. Net profit and EBITDA too have witnessed a growth in this quarter. However, EBITDA margins have remained flattish on a year-on-year basis. Winnie is joining us with more details on all of these numbers. Good morning, Winnie.
Good morning. Talking about Avenue Supermart, when you look at it in terms of numbers, revenue above estimates, profits in line, while EBITDA was above estimates on an overall basis, but margins a slight bit of a decline that we're seeing. So overall, we're calling the number in-line set of numbers. Revenue, 18% growth, profit seeing a growth of around 17%, while margins a slight bit of a contraction. We're seeing very marginal contraction. You could actually call it almost flattish is what we could say, because it's just a 4 basis point contraction that we're seeing in terms of the EBITDA margins. Now, what's supporting the margins now is that the contribution for general merchandise and apparel business, which is a higher margin business, that mix has started improving finally, because since COVID, we've seen that impact coming in on the margins because of general merchandise and apparel not doing well. Now that mix improving is surely something that is leading to an uptick in terms of the gross margins. Other than that, in commentary also, operating costs highlight have come in from the management, where they said operating costs have gone up mainly due to the continuing efforts to improve the services and building the capability of the future. So slight bit of an increase in terms of operating costs, but surely because of the general merchandise mix improving, that's something that's supporting the growth. JP Morgan overall, now they're maintaining their overweight rating. They said the revenue growth was quite robust, encouraging mix is working out well for the margins of the company, and they believe the best growth engine amongst the discretionary names is Avenue Supermart, and this should support the premium valuation that the company is trading at. So keeping an eye out on this one.
Well, absolutely. So that's the update, Winnie, coming in from Avenue Supermarts. But while you're with us, tell us about QSR channel checks as well that were conducted on some of the leading fast food brands. Then KFC is the only one that has taken price hikes. Tell us about the rest as well as KFC then.
Absolutely. So yes, from March 2024 to July 2024. Now this is a report that's come in from IFL Securities, what they've done in terms of a channel check for these QSR companies. So yes, KFC is the only one that when you look at it in the QSR space, that has actually taken a price hike from March 24 to July 24. They've increased prices in the range somewhere around 1.2% when the last check was. From that to now, there's an increase of 1.2%. Other than that, the key highlight is that Domino's, Pizza Hut, there's no price hike there. Popeyes also, there's no price hike. While Westlife, when you look at it, they're the only ones that have come out with a new product launch. Other than that, no one has actually launched any new products. Let's talk about pricing action coming in for burger side as well. So McDonald's, no pricing action there, no pricing action for Burger King as well. And Barbecue Nation coming in from casual dining side, they've also not seen any price hike this time. So yes, not much of a price hike that, if you're going to be spending on any of these products, you've not seen a price hike except for KFC. And specifically when you talk about KFC, the chicken bucket prices, they have increased in the range of 2 to 4%. Snacking menu has increased in the range of 2 to 6%, and this is all March 24 versus July 24. So keeping an eye out on that, KFC had launched one of these chicken popcorns. There was in the K world, that's K-pop world. So yes, the Korean chicken popcorn is something that one is watching out for. From the pizza side, what you're seeing in terms of discounts and offers that are coming in, now Pizza Hut was trading at a premium to Domino's. That has started reducing from versus March 24 to July 24. Cash discounts for both Domino's as well as Pizza Hut app, that has started decreasing. But on the third party platform, when you're looking at it, there's an increase that has come in terms of the cash discount for these companies. So yes, there is a better offer that you would be seeing in terms of overall when you look at it in terms of the cash discount that has come in. For burgers, McDonald's has reduced the cash discount offering. So yes, maybe it could get more expensive because now the off is only rupees 100 off on an order of 8.99 and above. Previously, it was rupees 125 discount that was given on orders worth rupees 449. So yes, you're clearly seeing the difference coming in terms of the cash discount that is reduced for McDonald's. So yes, keeping an eye out on the QSR space. Interesting channel check by IFL Securities.
Alright, Vinny, thanks for that update coming in from the QSR space. All of these QSR stocks will be in focus today, but let's get a move on, take you away from the markets and tell you what else has been happening. And Prime Minister Narendra Modi on Sunday set a new milestone as he became the most followed global leader on social media platform X, formerly known as Twitter. With over 100 million followers, PM Modi outshines Virat Kohli as well as Taylor Swift. The IMD has issued red alert for coastal Karnataka, Kerala and Konkan Goa for the coming days. According to the IMD, monsoon has started shifting downward and coastal Karnataka, Kerala and Konkan Goa will get more than 20 centimeters of rain in the upcoming days. And that was a wrap on the weather this morning. Moving on, even as anticipation grows over the announcement of the CUET UG results 2024, the NTA has announced a re-examination for the affected candidates who had filed grievances regarding the exam conducted for CUET UG. As per the NTA, the CUET UG 2024 re-examination will be held on July 19, 2024.
Alright, moving on to the world of sports then, Carlos Alcaraz has successfully defended his men's singles crown at Wimbledon on Sunday. The Spaniard defeated the legendary Novak Djokovic on centre court. With this victory, Alcaraz has now amassed an impressive collection of 4 Grand Slam titles, maintaining a flawless record in major finals as well. Moving on then, Spain secured a historic 4th European Championship title, edging out England with a 2-1 victory thanks to a late goal by Spain in the 87th minute. This win extends Spain's record in the tournament with previous victories in 1964, 2008 as well as 2012. So interesting times for us, Snehi, both in terms of sports as well as politics.
Absolutely lots happening over the weekend. You have to be happy for Alcaraz. Only 21 and 2 Wimbledon titles already. But on that note, it's a goodbye on this edition of Market Cafe from Shreyansi, me and the entire team that put this show together. Thanks for watching, but as we bid you goodbye, you stay tuned to the channel because the market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.